Today we're going to work on a statement of cash flow using the indirect method. And I have set up here on Excel, not because you need Excel, but just because it gives me a workplace to do this, the information for our balance sheet right here, okay, and the additional data. And this is based off of problem 16.1 in your homework. We have cash, receivables, inventory, investments, land, equipment, accumulated depreciation, which is a contra asset, that's why it's a negative. Accounts payable, accrued expenses payable. Accrued expenses is a term we haven't used a whole lot as far as accrued expenses payable, but all that means is, say you have maybe an income tax payable, salaries payable, any kind of expense that has not been paid yet that's set up as liability is an accrued expense payable. We have dividends payable, common stock, paid in capital in excess of par, retained earnings, and our total liabilities and stockholders' equity, of course, matches our total assets. The very first thing I want you to do before we even bother going on is I want you to find the difference from year to year. I'm going to, since I'm on Excel, just say that this column equals this year minus this year, so I can find the change. Okay, and since I am on Excel, this step is going to be very, very easy. And let me delete some of this out right there. Okay, now, like I said, you do not have to use Excel whatsoever. If you're not, pause the video for just a second and go ahead and find your differences. Again, this is just a difference column, okay? And make sure you indicate whether it went up or went down. You can see Excel is putting in brackets the negative numbers for those that went down. Okay, so hit pause, find your differences. And I'm just being picky about my formatting here. Okay, I'm going to assume you've turned the video back on and you have all these differences. So let's go on looking at this information and the additional data right here. You can see cash went up $39,840. Okay, that is actually the number we're going to prove before it's over. We're going to see how cash went up that amount. Receivables went up. We have inventories that went up. Investments went down. We had $240,000 investments. Now it's zero, so we entirely sold off those investments. If you look right down here, okay, our investments were sold for $280,000. We know we were carrying them at $240,000. We sold them for $280,000, so that means we have a gain, okay, of $40,000. Let me see here. I'm just going to take some quick notes if it'll let me. Let's see. Okay. This is not going to be neat, but we have a $40,000 gain. Okay, let's not forget that right there. Back over here, let's see, land. Land, we had none, and now it's at $328,000, so it went up. We purchased land. Down here it tells us equipment and land were required for cash. That means we care about that. This entire amount affects our cash. Same with the equipment. We purchased $152,000 in additional equipment. Let's see what else here. Accumulated depreciation, it went up. They're negative numbers, so it became more negative by $18,400. That's an increase in accumulated depreciation. And since there were no disposals of equipment during the year, that means that this right here is the same as our depreciation expense. Okay, common stock was issued for cash. You can see, skipping down here, common stock went up $50,000, and our paid in capital in excess of par went up $137,500. If you remember, when we issue stock for cash, we debit cash for the entire amount. Then we credit common stock for the amount based on par, the number of shares times par, and then any difference in market value over par is going to this account. So we actually need to, remember both of those numbers right there when we are going to deal with our stock issuance in the statement of cash flows. Okay, retained earnings, it went up. Retained earnings goes up for net income. It goes down for cash dividends actually paid. And we can see right here, it tells us the net income was $199,540 right there. Okay, we also have a $96,000 debit to retained earnings for cash dividends declared. I may have misspoke when I was talking about retained earnings. It goes down for cash dividends declared, not the actual paid amounts. So we're going to have to see if we can figure out the actual amount of cash dividends, and we'll get to that shortly. Accounts payable, let's see, it went up, and accrued expenses payable went down. Our dividends payable, that went up as well. Okay, so let's jump in here and let's just start here. Okay, so when we're doing our statement of cash flows, let me stop inking here. Okay, when we're doing our statement of cash flows, the first section we're going to do is the cash flows from operating activities. So, okay, now with the indirect method, our first step is just to simply put net income in. Okay, our net income, we're going to put in this column right here is 199,540. Okay, and where did I get that number? Right down here. Okay, and I want some commas in here, so give me a second. Let me see if I can tell it to give some commas. That's not what I wanted. Let me see. Okay, okay, hopefully that'll stick for the rest of the cells as well. So there's our net income. Step one is we are going to have a set of adjustments, and so we're just going to simply say adjustments to reconcile net income to net cash flows from operating activities. Now that's a mouthful. Hopefully there's a drop-down box or a cut and paste option in Cengage, but it is adjustments to reconcile net income to net cash flow from operating activities. Okay, and let me make this a little wider here. Okay, very good. Our first adjustment is we have to add back non-cash expenses. Our non-cash expense is depreciation. Okay. Let me do some indenting here and make this a little easier to read. Let's see. This is not going to be perfect, but I'll make it a little bit better. Okay, so depreciation is $18,400. Where did we get that? That is this amount right here. Okay. The difference in accumulated depreciation gives us our depreciation. We're going to add that back. Because this is a statement of cash flows, basically we're trying to reconcile between net income that's done on an accrual basis to a cash basis. Depreciation didn't cost us any cash, so we're going to add it back. And that's step one. Next, we are going to add back our gain on sale of investments. Okay, it's not that we didn't have a gain, we certainly did, but the gain on sale of investments we're going to deal with in the investing section. This is the operating section. That gain increased our net income, so to wash it out, we're actually going to subtract this gain. Okay, and it should be a $40,000 amount. That's what we wrote over here. We didn't want to forget that. And again, we compared the $240 to the amount of cash it said we got for it. $280 minus $240 is a $40,000 gain. Okay, now the next part, we are going to deal with changes in current operating assets and liabilities. Okay, now if you look in your book, they give you a lot of detail on whether you add or subtract these changes in current operating assets and liabilities. I have summarized it right here, Okay, everything the book has is correct, but I can summarize it here. You know, they say something like an increase in accounts receivable is going to be subtracted from net income, an increase in inventories, whatever. So I'm just summarizing it. Any increase in a current asset, that difference is going to be subtracted from net income. If you can even just memorize one of these, everything else is an opposite. An increase in current assets is a subtraction. A decrease in a current liability is a subtraction. You know, the opposite here. Decrease in a current asset is added, and then the increase in a current liability is also added. So what we're talking about is these amounts right here. These are our current assets, okay, receivables and inventories, investments, land and equipment, all that. That's not a current asset, so we're not dealing with that. Down here with current liabilities, these right. Well, actually, dividends payable is also a current liability, but we're only going to deal with these two right now. We'll deal with dividends payable separately. Okay, so for starters, we have an increase in accounts receivable. Okay. Okay, that increase, according to this, is 18,880. And since I am on Excel, I can just do that. Okay, 18,880. We have an increase in inventories. Okay, that equals this amount right here. Okay, we handled our current assets, going down to our current liabilities. Accounts receivable had an increase. I said accounts receivable, I meant accounts payable. Okay. So that equals this amount right here. Hold on, something didn't happen right here. This increase in inventories, that's an increase, that should have been, I'm going to go back and double check all the subtractions and everything in just a second. Right now, just the numbers are there, okay? Let's see, decrease in accrued expenses payable. Okay, that amount then, let's see here, equals that. Okay, now let's look at the rules that we have set up though here to make sure that everything is properly being added or subtracted. The increase in accounts receivable, look down here, that's supposed to be a negative. Okay, so let's make this negative. Let me see if it'll just let me do it this way. Equals negative D6. Perfect. Okay, the increase in inventories, that's also over here. It's going to be a subtraction. So we're going to say this is also negative. Okay, the increase in accounts payable, okay, an increase in a current liability is added. So we're going to leave that as a positive number. The next one, a decrease in accrued expenses, that's a decrease in a current liability. That is going to be a subtraction. So it is okay that we leave it negative. Okay, so make sure that if you don't understand why some of these are being added, such as this one, and some of these are being subtracted, such as the other ones, you follow the set of rules here. I probably should mention this is not a T account in the sense that we have learned them so far. I'm just simply using this format to help us remember if things are added or subtracted. Net income is not an account. Okay, but what are we doing to net income? We add these things over here. We subtract these things over here in our statement of cash flows in this section. Okay, so we've done that. We have now, just to recap, we have added back non-cash expenses. We have washed out the effect of any gain or loss, and then we have dealt with our changes in current operating assets and liabilities. So now we are ready to get our net cash flow from operating activities. Okay, and let's see, let's put a, need a border here. Okay, and right here I'm just going to sum all of these right there. Okay, that's just this column added up appropriately. This plus this minus plus minus gives me that. And that is that section. I am working on a free version of Screencast-O-Matic, and it stops at 15 minutes. So I'm going to actually stop this video, and we'll pick back up in just a second.